Raoul, what's on your mind? What are you looking at right now?
So the ongoing narrative, I think if people have been watching the daily briefing for a while, is that my hypothesis is a slowdown, not just the US, but globally. And that the piece of data we saw today is just an outlier in a general trend of data that is getting weaker. The Citibank Economic Surprises Index has gradually fallen below zero as the trend of data has got weaker. That is a basic lag from the Chinese economy, which is weak. And we've seen weakness within parts of Asia as well. I think that goes forward, and that's a lot to do with demand brought forward, and the high rise in prices has caused a complete collapse in demand in certain goods, particularly big ticket items. Secondhand cars, housing, and general large consumer durables have seen consumer confidence fall, and things like buying climate at all-time worst levels. So people have thought, we will see this flow through in terms of consumption patterns. We've also got the story that you and Western broke a long time ago, which is the story of Japan, the Olympics, and COVID, and a total screw up there, having dealt so well with the virus and then opening the borders for the Olympics, and it seems that half the bloody athletes have got COVID. So that's now spread like wildfire through the Japanese population. Don't forget, Japan is the third largest economy in the world, and this really matters. Because again, it may be supply issues. It's just all at the margin. It's not like COVID, that the Delta variant is going to take over the world. It's going to be like March again. What we're talking about is a rate of growth that is not as fast as it has been. And I know Jim Bianco had the same view yesterday. Eric Besmagian today on Real Vision Plus, talking to Jack, had similar views. David Rosenberg has got similar views, and all of us believe that the economy, ex-stimulus, after the sugar rush, tends after recessions to be weaker for a period of time, and generally that leads to more stimulus. And I see that story playing out in front of us. Bond yields spent most of the time falling, and then had a two-day kind of screaming rally higher as we go into non-farm payrolls, and my guess is they drift off next week again. They'll consolidate sideways for a while around these levels and then make the push down to 1%, I think, is the next thing. The other big news of the day that is incredibly not noticed anywhere is that the dollar broke that huge inverse head and shoulders pattern that I've been talking about, and the euro has a perfect head and shoulders pattern at 118, 117.5, which it broke today. And it had touched the trend line before, bounced, and then broke below it now, or just to it now. That would suggest that the euro could go to 110, and we've got a hell of a strong dollar rally to come, which is commensurate with a risk-off phase. So it's something I've been looking at, writing about in Global Macro Investors and in Real Vision Pro, is that we should be long bonds, long dollars, because this kind of environment will see that happen. Also, the other thing I've been looking for is growth stocks to start outperforming, and that's been going on too. So the markets are confirming my narrative. Let's see if that continues, but that is really, really what, in the macro world, I've been focused on.
Yeah, you're a dollar up to 122 in May, now down below 118. That's a big move.
It is, and I think it's going to go much faster. I think the dollar is going to go a lot higher suddenly. What's going to be the catalyst? I don't know. China is not good right now, and also what's going on geopolitically with China and within China are not comfortable for markets. There could be capital flows from there. Japan also, dollar yen's a notoriously difficult beast to trade and has been trading sideways. But if Japan has to come in and stimulate because they've had to shut down their economy again, well, there's a chance that dollar yen moves out of the range that it's been in for a while, and maybe moves up towards the kind of 120, 130, and starts going higher. I don't know, but that's always been a risk for me. So macro is back in play right now. The inflation trade has faded away. There are some structural trades in oil and stuff like that remain relatively strong. And I think Tony and Tracy today on the platform on Real Vision Essential on Oil Week talked about how bullish the oil market is. And I think that's probably true. But oil isn't the only inflation, and it only has to stop going up for inflation numbers to fall. And I know the other narrative that is important is I do understand that most of these prices will never come down again. They just year-on-year rate of change of inflation drops lower when the price gains always seem to stick, except in wages. So let's wait and see, but there's a lot going on. Right, the market can't crash. I keep saying this to Julian. He's like, oh, inflation. I'm like, okay, so what? What happens in market terms? So inflation, bond yields go up, and the Fed capped them. They've already said they do yield curve control. The Australians did it. Europeans have basically done it. The Japanese have done it. So then you can't, bond yields don't go up. So does that destroy the economy? No. What happens to the stock market? You know, if the stock market falls, they stimulate again. It's kind of this weird world where nothing can go wrong. What does go wrong is the value of your dollar, without you knowing it, is going down.
Right.
And an asset so the value of houses has just gone up 25%, like in a straight line. Same with, other fixed assets, equities. And that means your dollar of savings now buys you less of an asset. And think of assets as future deferred consumption. So you buy an asset now in order to sell it later to buy goods and services in due course. You can now buy less goods and services. So everybody doesn't realize it, but the value of their dollar is going down.
Right. That is the risk. And it's so interesting because it's difficult to tell if the value of other currencies is declining. Look at, for example, dollar yen, since, for the last 10 years, up. But the actual purchasing power of the US dollar can decline simultaneously. This is a weird world. We've never seen
because people think of it in relative terms versus its currency without thinking of the overall value of fiat. And I figured this out when I did UK house prices against the Bank of England balance sheet. I know people hate those charts, but they bloody work. Swedish house prices against the Riksbank's balance sheet. US house prices against the US central bank. It is there for everybody to see. And it is happening. And this was my flaw with the MMT argument from day one, is yes, you can always finance yourself. But there is a cost somewhere, and that cost is the value of money. And we're seeing it. And that's what 140 million people have figured out in cryptocurrencies right now.
What are your final thoughts on what you are going to be looking for in the next couple of weeks?
So I released Global Macro Investor last Monday. There was an article buried there. It was only about 6 pages long, and it was entitled The Greatest Trade. And it's just Ethereum. I think it's a better setup in Ethereum. Well, it certainly was by Monday, but it still remains, than March 2020 was for Bitcoin. And basically, and without giving away the full article, because I think I'm going to put it on Real Vision Pro, basically, there is 13% of all the free float of Ethereum available. Everything else is being staked, blocked, and hoarded. They've just made the supply more difficult. So the supply is lower. The Ethereum that is in free float is falling every day. And now we've just got the 1559 token out of the way. Most people are going to start staking the ETH that they hold. And there is no ETH available. And demand is going exponential. Exponential demand meets fixed supply equals exponential price rise. One of the best setups I've ever seen.
Talking of the crypto world, news crossing the wire within the last hour here today, that Brian Brooks, U.S. CEO of Binance, has just resigned after only 4 months on the job. If there's one thing about crypto we can be sure of, Raoul, it's that there is always news flow to be had.
Yeah, and there's always a scare story somewhere down the track. I was flicking through the FT app today, and Katie Martin's article, and it's just dripping with cynicism at every level about Bitcoin. You see that everywhere, or about crypto in general, and there's always something going on. This space came out of the Wild West. It's not the Wild West now, but there's still a cleanup, and the sheriffs are in town, so God knows what's going to happen. And, stuff will get cleaned up, stuff will get regulated. It's all part of the journey. Step back, look at that adoption curve, 113% a year, fastest growing adoption of any technology in human history. That's all that matters.
Raoul, final thoughts that you'd like to leave us with before we end for the day?
No, just buy Ethereum. That's all I can tell you.